Nearly 15 years since the Bitcoin white paper, an idea has become the new internet architecture, with ownership, digital identity, and value storage native to technology. Digital assets now are no longer a new technology. They're used all over the world. And America has always led technology invention, and if not invention, implementation. And today we're at risk of falling behind competitors around the globe.
What an insane week it's been so far for the entire crypto space. We've uncovered some skeletons in the SEC's closet with the Hinman documents. Binance caught a massive break from a judge who denied the SEC's freeze on their assets. And the Financial Services Committee met yesterday to talk about the future of crypto, and it was very, very good. But don't let that sidetrack you from the broader picture, as we still need to dive deep into some data points that show we're still months away from any kind of significant movement in the markets. So the first thing I want to dive into is the Hinman documents. We're not going to cover this too much because tons of people have been talking about it, but it is important just in case you haven't heard of it. Basically, the SEC was arguing that Hinman, the former director of the SEC, was expressing his personal viewpoints on the matter of Ripple being a security and all other cryptos being a security, and it wasn't the SEC's viewpoint. However, the document showed that that was false, and he asked many SEC officials' opinion on the matter. Basically, the big takeaway from this is that it discredits the SEC and shows that, one, that they've been lying, and two, they have absolutely no idea what they're doing when it comes to the digital asset space and how to regulate it properly. Fortunately, this comes at a very critical time, especially coming for Binance, because last week, if you don't remember, the SEC tried to freeze Binance's assets in order to protect U.S. investors. As you can see here, it says that the SEC said it was seeking to ensure the safety of customer assets at the U.S. operations given the company's years of violative conduct, disregard to the laws of the United States. Basically, just a way for Gary Gensler to attack Binance in trying to get all of their reserves out and basically crumble the company. And just days later, what happened is that Binance actually stopped USD trading pairs for all customers. It said it would no longer allow customers to trade on its platform using US dollars. So Binance.us is only at this point in time a crypto trading platform. So while this very important news came out that Judge Amy Berman Jackson denied the restraining order request from the SEC, they're still left with some work to do. And in a response, basically she said that the lawyers between the SEC and Binance need to figure things out between themselves. And in a response to that, Binance has actually hired a former SEC enforcement official to join their law. And coming from a former internet enforcement officer from the SEC, it says Binance is clearly preparing for a criminal prosecution and continuing to hire the best defense attorneys in the world, even picking people that used to work for the SEC. And the really important thing that I wanted to cover that was very optimistic for the crypto space is the Financial Services Committee met yesterday and they talked for about 5 hours. Now, I'll leave a link to the website so you can go check out the video if you want to watch all 5 hours, or if you want to take a look at their legislation. I'll leave that link in the description down below as well. But basically what you need to know is that it went over the future of digital assets and it provided clarity for the digital asset ecosystem. And there were some pretty important people in the crypto space that appeared, the CEO from Circle and the CEO from Ava Labs. Now, here's the one really big takeaway that we need to understand. Both the red and the blue side, Republicans and Democrats, agreed that there needs to be fair rules and regulations that need to be clear for the crypto space, but they also agreed that they need to keep crypto innovation within the United States, and so they're going to work to make this as quick as possible and as fair as possible for the crypto space. And one of the important things that they talked about was the stablecoin market in terms of how they're going to regulate it and what they're going to do with it. And as of right now, it needs to be somewhat more regulated because what we're seeing is that all stable coins are falling, whereas Tether is really the only one that's gaining traction. As you could see here, every line down here, you have Binance USD, DAI, USDC, all of them are falling in terms of market cap, and everything is going to Tether, which we all know Tether has some of its own problems in terms of, proving that it has the correct amount of reserves. So this was a massive day for crypto. Congress showed some positive. So this was all in all a massive week for crypto. Congress showed some massive positivity towards the crypto space, and the SEC is now under fire for all the skeletons in their closet that they've been hiding over the past few years. However, I don't think we can celebrate just yet because we need to remember this is not a good time for crypto prices just yet. We're still in economic uncertainty. There's big money sitting on the sidelines waiting for regulations to be figured out, and we're still a year away from the halving. And some of the data that I wanted to jump into is kind of looking at how the crypto space and specifically Bitcoin performs the year before the halving. Now, the years before the halving that we're going to look into is 2015 and 2019. 2015, I like to think of, it's a little bit of an outlier because Bitcoin was still very new. I mean, this was also the year that Ethereum came out, so the crypto market was still very small in terms of market cap, exposure, and a lot of that stuff. But you could see that currently we're sitting in June as of right now. And the rest of the year, basically quarter 3 and quarter 4 for Bitcoin, how it performed was pretty well. I mean, it had only one red month falling 18% right around here. But every month after that, it did pretty well, especially October to December. It rose 32%, 21%, and then 14%. But something a little bit more similar to what we could be seeing right now is 2019. Now, if we take a look at 2019, you could see that from July all the way to the end of the year, it had red months every single month except for October, falling basically 8%, 4%, 14%, and the highest being in November, falling almost 18%. So if we get something very similar to what's happening now, which I think will be, we've had quite the rise in Bitcoin's price at the start of 2023, even though everybody thought 2023 was going to be a bad year for all assets. It rose 40% in January and then another 23% in March. However, for the rest of the year, if we follow the trend of what 2019 did, and if there's still economic uncertainty, what we could see is that for the rest of the year, Bitcoin's price will not do so well. And just to kind of show you on the charts so you can visually see kind of how it played out, if we go over here, basically if we're taking 2023 and backtracking to 2019, this is around the same time frame that we are in today's price, right? This is June or July of 2019. And you can see this is kind of where price topped out at, right? A year before the halving. And what happened was that price just continued to fall. And obviously we all know this is when the pandemic hit. So there's obviously a little bit of an anomaly happening here, but very much what's going to happen, or at least personally what I think is going to happen to Bitcoin's price is what happened in 2019. Really just consolidation and price continuing to fall until right around here in March and April when the halving happened. Right here, April 2020. This is when the halving happened, and as an outcome, Bitcoin's price absolutely skyrocketed. But again, if you take a look back here, we basically had 6 to 7 months of downward pressure, no volume, nobody was interested in Bitcoin. And then the halving happened and price absolutely skyrocketed. That's where you got a lot of your institutional investors, and that's where you got a lot of trading volume. And so I personally think we're going to see quite a similar fate for Bitcoin where we're going to continue to drop. Maybe we could fall within this range. Maybe we could take out the lows of 15,000. I think it's unlikely, but it's possible. But I think what we're going to do is just continue to consolidate. And once April of 2024 hits, when the halving hits, hopefully by that time regulations are cleared up, big money will start to flow into Bitcoin, and that's when we could see Bitcoin skyrocket back to its all-time highs, and we'll see how high it can go from there. But in terms of what's happening right now, if you take a look at the cryptocurrency market excluding Bitcoin and Ethereum, it's not doing so well. And there's a reason for that. It's because of the regulatory uncertainty, and also we're just not in altcoin season. Everything is flowing back into Bitcoin, and that's what, when you look at Bitcoin's dominance, it continues to rise because all of the money from altcoins is continuing to fall down and down and down. All of it's going towards blue chips, safe havens, gold, Bitcoin, whatever it may be. But the market cap is going to continue to fall. And I personally think that by the end of the year, we will take out this low of basically 300 billion in the cryptocurrency market cap. And what we'll see is we'll continue to see altcoins bleed until the halving, which is right around here. So right at this point, I would just continue to see altcoins bleed, especially when you compare them to Bitcoin. And so as of right now, altcoins are just not a good move to be in. And as we take a look at this is basically the institutional flow of where money is going in terms of the crypto space. And again, you could see the years before the halving, there wasn't that much activity, right? Just hundreds of millions of dollars, which sounds like a lot, but when you're talking about institutional money that holds billions, sometimes trillions of dollars, it's really not a lot of money. And of course, the halving happens in 2020, and then the year after, it's still booming, and you get an inflow of around $15 billion. The last 2 years, we've actually had net outflows from the crypto markets. So it really begs the question, when 2024 hits, are we going to get these types of inflows from institutional investors? And if regulations are cleared up, is it going to be even more? So that's everything I have for this video. I hope you guys enjoyed it. I hope you got some value from it, and we'll see you guys in the next one.